what's up guys, welcome back to another video. So in today's video what we're going to be going over is reaction levels in the market. So basically what reaction levels are, for example, right, if you're taking a look at the 1 hour chart, as we all know that if we look at the smaller time frame charts, you're not seeing the bigger picture. So what we like to do is always take a look at the weekly and the daily time frames to see what is going on the bigger time frames. But let's just say, for example, you were looking on the 1 hour time frame and you noticed this GJ spike yesterday, right? So yesterday, Thursday, it was the 31st of April. I'm not even sure if there was a 31st or not. But you saw that we had this large spike, right? A little pullback and then a boom, a big spike, and then price reacted from this level. Now you might be looking back and you want to wonder, if let's just zoom in here, you want to take a look at why price reacted from this area. Now here's the thing, this is how you figure out. If you take a horizontal line, right, you take a horizontal line and you just scroll out. Okay, I see. So right here we have a level of resistance, right? So we had this wick up here, we had this structure up here. This is creating something like a resistance, right? A triple top right up above here. But this is not enough. This is not clear to look at. So this is what I like to do, right? The big thing, support and resistance works, guys. But the major thing that a lot of people get mixed up is that they're trying to look at support and resistance on the 15-minute time frame. They're trying to look at support and resistance on the 5-minute time frame. They see something like this, right? Oh, this is a really nice support. Price is reacting off this area. Let me buy. Once price comes back down here, boom, they buy. This is not strong enough. The proper type of support that you should be looking at is on the daily, the weekly time frames. Now here's the thing, reaction levels aren't just areas of level and support, of support and resistance, right? So I'm going to show you guys what they exactly are. Now we took that line from that 1 hour wick that we were looking at, right? You know, we took that line from that 1 hour wick and we want to see where price reacted off of. So if we take a look at the 4 hour time frame, still not enough for me. So what I like to do is take a look at the daily or the weekly for the reaction, for the action levels. I don't think that the 4 hour or the 1 hour are completely sufficient enough. I don't really pay attention to them if they aren't on the daily. The weekly is definitely the strongest, and you should always get a reaction around these levels, right? Nearly 90% of the time. So if you take a look at the daily, we drew that wick for the 1 hour and boom, you want to scroll back. So we have this touch right here. That's one. So this is previous resistance. If we go back, oh, okay, we have another touch here, and another touch here, and all these wicks down into this area. And then you can see, well, this is a fairly large wick, but now we're not even going to count this one because that's just cheating. Okay, so anyways, we can go back here. Okay, this is very close to the level. That's another one, and then this market structure around here, right? And if we scroll back, can we find any more? Oh, okay, there is even more structure playing around this level. So we can see that this was clearly some previous resistance right here. Price broke through, right? And we have more touches up here, all around here, more touches back here, there, and you guys get the concept. Even more touches here. So you can see that this area is a clearly highly reactive area, right? You can see from the past few months, even years, right? We can see that all these we can see that all these areas right here have some sort of significance, right? Very strong levels, right? All here, all there. So this is how we use them to help us, right? We take a look at the daily time frame and we identified all these levels. For example, on the weekly, you can kind of notice the same thing right here, right? Boom, on a weekly. It's obviously stronger on a weekly. So what I like to do when I'm marking out my action levels is this. I like to take my line and I like to draw my lines in a very light gray, depending on the background of your chart. So in a very light gray, so it doesn't bother me, but I can kind of see where the reaction levels are, and I like to draw them out on the most significant parts. So what you're trying to do is you're trying to get the line to go through as much wicks as possible. Now these reaction levels have been previous support in some areas. They've been previous resistance that have been broken through, right? So it's not just support and resistance areas. It's also broken through support, broken through resistance areas. And a lot of the times, to find your institutional candles, you're going to find that your institutional candles are always sitting on areas of support and of reaction levels. And they are the most most high probable trades to get into. The institutional candles on the higher on the reaction levels, because remember, as I said, the reaction levels are mostly made up of support and resistance and broken through support and resistance lines, right? So for example, let's mark out some areas. So right here, boom, very reactive, all these touches, fair enough. Another area will be right here, this touch, all right here, all this market structure, boom, perfect. Mark out another area, the weekly, all these here, this sort of market structure around here, all right here, beautiful area. And now we can maybe target this area down here, right? So this sort of support, all this market structure in here, and these two major wicks. So we can target these. Now remember, this is the weekly time frame. We can go down and put it onto daily. Now if you're trying to mark out every single area of lots of wicks, it's gonna really get difficult, and it's gonna get confusing, guys. So for example, if you mark out this area, okay, fair enough. What I like to do is on the weekly, I like to make the damn gray lines a darker color, and then these daily ones a lighter color. So you can tell that, oh, okay, these are not as high probable as the darker ones. It helps a lot. So for example, you can do a couple of daily ones, like very strong ones, such as here, and maybe one more right there, right, this level right here. That's all for GJ. That's what I like to look at. And then what you can do is just lock these on, and then you don't even have to delete them again, so you understand where these levels are, because obviously it's on the weekly, daily time frame. They're not really going to change much, are they? So what do we have here? Once we have all these reaction levels on the weekly and daily time frame marked up, it's beautiful, because you can take a look at the 1 hour time frame, and as market structure approaches these levels, you can be very aware of a certain reaction, right? This could really help you if you're, as I said, taking a trade from an institutional candle on these levels. Very reactive. So for example, we had one of these on a weekly time frame, boom, price came to this level, reacted here once again. So you would have had this marked up beforehand, because you saw all these previous touches and all these previous touches back behind there on the daily time frame. You would have marked this, so you would have anticipated some sort of move from this area, just like that. So that's what you use these reaction levels for. For example, if we were to take a look at price action from the top here, we saw that we had a clear strong area of reactions right here. So could we look at, you can see that price came down, came around this reaction level. We could kind of expect a turn up. Now, what do we look at? We look at institutional candles around this area of reaction. So, boom, if we're looking to buy here, lines up beautifully now, by the way. Beautiful bullish structure on the daily, on the hourly time frame. Boom. We look for the institutional candle around this area. What do we have? Boom. Just like that. So, this institutional candle that could probably be found even nicer on the 2 hour time frame, right? So boom, this last bearish candle for the down move, you're looking to enter off the open of the candle, just like so. So this would be the open, sniper entry. Could you get a more accurate entry than this? And your stop loss would literally be 23 pips. 23 pips. Where could you have aimed for? You could have aimed for this area right here. Why do we aim for this area? Because we have this candle right here, this continuation candles, and these candles are usually highly reactive. So we aim for here. Why do we also aim for here? Because we have a minier area of reaction on the smaller time frame, right? So we take our line, boom. You can see that this area is clearly highly reactive on the 2 hour time frame. Boom, all these touches, and this is where we can place our take profit. And we would have had a nice 91 pips to 23 pips, so that would have been a 4-to-1 risk to reward ratio, which is brilliant, right? So this is how you could have easily marked up a setup, a very clean setup, using these reaction levels and aiding them not only to get your entry, but also using them to predict where the market could move, right? Where the market could react from. So that helps you in placing your take profit level. So once again, we have that area of reaction, right? I'm gonna delete this, and delete. Actually, we're gonna keep this right here, right? So we have that reaction level right here. All right, we have that reaction level. What do we look for? We look for institutional candles around that reaction level. So this one happened, it flew up, we had another institutional candle. Now what do I always say? We always get another institutional candle being made up after it touching the institutional candle. So the candle that usually triggers us becomes another institutional candle after a couple of hours, right? So what do we have? We have that same candle, boom, institutional candle. What do we look for? we look for the open of the candle, right? The opener 50% of the candle, boom, another sniper entry. You could have bought once again from this area, right? And oh, coincidentally, it's sitting exactly on a reaction area, right? That open of the institutional candle is sitting beautifully on that reaction area. It makes it more high probable. That wick comes exactly straight to the pip, to that reaction level, and it bounces up. What is our take profit? The same take profit once again. That area, as we can see, is kind of creating some support around this area. We can also see that reaction level stays the same. So we could have caught the same trade twice. What could have backed our entry here once again? We could have tried to see if the fib lined up. Now we obviously used the fib, just like that, right? Brought the fib up here. Now the fib is not a magic tool. It's just an area of premium discount where the banks could buy cheaper and sell at more expensive prices. So we could have brought that. Anywhere below the 50% is ideal areas to buy from, but the 71 and below is the best areas you'd be looking to buy from. So as you can see, the 71 wasn't bang on the open of the institutional candle, but it was pretty close, right? So take a look at one more pair. Let's take a look at your GBP, guys, right? So we're going to take a look at your GBP. Once again, what do? We take a look at this on the weekly time frame. All right, so where do we mark our institutional levels? Boom. These are reaction levels. As you can see, reactions all around. I genuinely do think that there's a reaction level around this level. See all these wicks through it. Another one would definitely be around here, right? This sort of support, very strong support on a weekly. And one more would be right here, all these weeks right here. And we can take a look at the daily time frame and see if we have any stronger areas that we could mark out. Yeah, I do see one more right here. So this market structure, right? All these wicks, this is a very strong area on the daily. Boom, boom, boom. All this market structure, these drops down here, pushes up, boom, boom, boom. Right here, this previous support that got broken, right? Then boom, once again, right here. So let's take a look at the 4-hour time frame. So what do we see? We see bearish price action. Forget about this area here, right? Forget about this area. Boom. We forget about this and we're looking at this pair right here. We see bearish price action, right? Just like that. We see bearish price action. We're trying to look for sells, right? We're trying to look for sells. What do we see here? If we take a look at the 1-hour time frame, we have a nice institutional candle, the last bullish candle before the down move. We mark it out, right? Boom, we take the trade off the open of the candle. Boom, could have shot nicely, dropped, could have bought up once again, and it dropped beautifully again, so you could have sold from here. Another sniper entry. So notice, guys, very easy to catch minimum drawdown setups. Your stop loss on this, 12 pips. Where could you place your take profit target? At this area, right? At this area of reactions, because we saw on the daily and the weekly time frame that this area was a very strong area of reactions. So boom, just like that. What happens? Price comes down beautifully to that area, hits us out of take profit, beautiful, especially with the spreads and everything, and price shoots back up. If your take profit was a little bit lower than this reaction level, you would have been clapped, because this very strong bullish movement after, right, gave us a beautiful 77 pips to 11, gives us a 6.6 risk to reward ratio. There's people out here aiming for 2 to 1s, 1 to 1s. No, the minimum is 3 to 1. You're trying to aim big, right? You're trying to aim big. One more, right? That institutional candle, right? That got this institutional candle. The candle that triggered this institutional candle dropped. One bullish candle before it was the institutional candle. This ended up creating another candle just like that. So we could grab our box and take a look at the entry, the open of this candle, right? So this could be second entry, just like that. So you could have entered once again 8 pips. You could have aimed for the same place, just like that, right? So you could have stacked this twice. You could have got in here, dropped down, came back up. You could have entered another trade, so you could have had 2 trades on this. You could have ran this break even, so this could have been risk free. Then boom, dropped another lot here, did exactly just that, triggered it. 3-4 hours later, hit the take profit. Beautiful trade. So that's how you use these reaction levels to your advantage. Now guys, if you would like to get more of these types of videos, we do obviously have the FU trading course where you can get access to all the smart money fundamentals. Then you can get access to all the advanced videos, right? So for example, all these videos right here, if you take a look at this, waiting for it to load, and there we go. Right, so you can get access to all our videos right here on our smart money course. You can also get access to our signals on our website, guys. So if you're interested in hopping on our signals, we have 3 packages. We have the monthly. The internet is being a bit slow today. Right, so we have the monthly for 50. We also have a 6 month, and we have the lifetime. With the lifetime included, you get one-on-one mentorship, so you can hop on calls with me personally and I can help you out with your trading. You know, if you're stuck on certain things, you get access to this. You also get access to our signals group, just like that. Right, so you get access to our signals group, all the analysis charts sent in, hit and take profits on the daily, and you can also get access to our discussion group, just like so. So we're always sending in trades, you know, so much value being dropped in these groups, you know, and a lot of fun's been had as well. So it's like a big family. So if you guys are interested, make sure to check the description down below and you can definitely hop on that. But anyways guys, stay tuned for the next video, and I appreciate everyone for hopping on this video. I hope you guys gained a bit of value, and I talk to you guys later. See ya.